Well, thank you all. It's been a pleasure to be here in Adelaide at this 2019 AusIMM Uranium Conference. It's really been fascinating to see all the components of this industry really come together, from geology, safety, regulation, uh, oh boy, mining infrastructure, scientific studies, health and radiation work, remediation, and more. It is great to get really the complete realm of this business within this conference. Now, I want to look over at the uranium equity side and really the money part of this business from an investment perspective. Um, Show of hands here, how many of you own uranium equities? Okay, and how many here own 10 or less? Okay, a few. And how many own more than 10? Okay, and a few. And of those hands, who owns these stocks in 3 or more uranium producing jurisdictions? Okay, maybe half of you. Okay, well, thank you. Now I need a volunteer or two. You, what stage of uranium equities do you own? Okay, a developer, okay. And jurisdictions, which ones do you own? Australia. Okay, well, given who you are, I think I know which one. Uh, Tell me, what's a key factor you look for in uranium equities? Okay, location. Okay, very well. Location, jurisdiction, fantastic. Okay, well, thank you. Next volunteer. All right, okay, you. What stage of uranium equities do you own? Okay, explorer, okay. And what jurisdictions? Ah, Namibia, okay. Interesting. Well, tell me a key factor you look for in uranium equities. Management and price, yes. Well, very well. Well, thank you for the participation. You two volunteers see me after the session to collect a prize. My name is Andrew Weekly, founder and CEO of a small independent research office called SmithWeekly Research. We've done a respectable chunk of research on the uranium business over the past few years, including a substantial research report on the thesis for investing and speculating in uranium equities. I am personally allocated heavily to this sector, and I've spent capital time in the broad natural resource sector for about a decade now. SmithWeekly Research entered into the natural resources sector in 2015 with the launch of our venture investor newsletter, and we officially became bullish on uranium in early 2017. So far, we've been early and wrong. The point is here is what is coming, and how the end justifies the rest is what is important. Now, my time at the moment is limited, so this presentation will cover really a high-level consideration of what I call uranium mining equity portfolio strategy. Again, I will be brief, so if you want all the extreme details related to this strategy, I must refer you over to our extensive 2019 edition Nuke report, which encompasses really the situation over about 360 pages of what I could be considered as boring, yet highly demanding of your attention type of research work. Advance the slide here. Okay. Well, I want to talk about how you express that strategy, and really you do so with these things. Jurisdiction came up when we pulled the audience. The stage we'll get into, that's the various stages of these uranium companies. And of course, something I like to talk about, which doesn't get talked about often, but something that I think is important, is really identifying that all stage exposure, which I'll get into in a moment. And then of course we have other considerations which are also key, and might I highlight the risk mitigation and exit strategy, which also is highly important. for any type of investment strategy, whether we're talking about uranium or something else. Now, I'm not here to convince you. There is no doubt there is a new uranium cycle that is in motion now for these reasons. And in my opinion, I think that by now we would hope that you've decided and agreed a position now and really wait for really that pop. And the reasons are here, the fundamentals are here, and it's really just a matter of time at this point. Now, one of the first things is jurisdiction, and here is listed the uranium exporting nations around the world. And then also might we highlight at the bottom the wild card, which is those nations that are attempting to prepare a framework to potentially export uranium within their country. And that's also a key consideration in this new cycle. And so I want to highlight that all these places really have pluses and minuses, which we'll get into a little bit more. And so I think that that also is important. You can't just look at one place over the other. I believe that these places listed here all have some key features that others don't have. Related to the stage, we really have in this business producers, developers, and explorers. It really is those three categories, and they all each have different attractions. And I believe that they're all part of a total strategy. Of course, producers have certain features, developers have certain features, and so do explorers. And explorers, while the riskiest and also the highest reward, they really add that pop that adds to that portfolio, whereas perhaps the producers are maybe that less risk part of the spectrum with not maybe so much reward. And so I think that all of these stages have a key part to play. Now, all stage exposure, this is a really big key part for us, and we've talked about this in extensive detail in our nuke report. That all stage exposure is really a company that has the ability to be in the right place and really have the right timing and all of the components really needed to get there. And what that is that's the ability to discover, the ability to advance, develop, finance, commission, and produce yellow cake, and do it all in the same cycle. And that really is the key part, and preferably do it in the midst of a bull market where sentiment is increasing in a positive fashion. And so that is really the key ingredients to what we like to call the all stage exposure. And we believe that this is a key and core component of your allocation strategy, portfolio strategy. On timing, one of the things people need to consider is places like Namibia and Niger can be fast. You can get things done here quite quickly, grease the wheels and get some things done, whereas maybe more Western jurisdictions such as Canada, Australia, and the United States, it really takes more time to get things done and can be quite tedious and difficult. And so I think people need to consider timing in their portfolio strategy. Look at all these jurisdictions and consider timing as a part of your considerations for how you structure it. Early producer advantage, that's another key point. There are companies that exist that can produce relatively quickly within a year, in some cases, maybe a little bit more. Some could be a couple of years, but there is that opportunity to get some early production exposure advantage going. In the US, Section 232, we don't like the US just for Section 232. The US is a solid jurisdiction for other reasons, but Section 232, good or bad, could provide perhaps an early shot in the arm to get things going. However, it's not critical for this uranium thesis. In fact, it's only something that could potentially jumpstart it. the fundamentals remain the same. However, we do like the U.S. regardless of Section 232. We like the U.S. as a jurisdiction, and there are a few key states within the United States that we do like to have exposure to. Of course, new jurisdictions are always questionable. And of course, right now for us, for our portfolio, 2019 is a fantastic time. You want to be early to this show and certainly not late. Talent is also important in this sector, in this industry. You have to sift through and filter through management teams to get to where you need to be. So we suggest that you take a look at this very hard. These are some considerations here in the list. These are all key parts, but there's more to it. It takes quite a study of management teams to get this figured out, but these are some key points that really make management shine. We do like old steadies that have done things in the past. They're proven. They've taken a question of can they do it last time, and they've performed and answered that question. And so I think that that is also a key part. And talent comes with people who really know how to pull the trigger when the time is right. So they are able to put everything together at the right time. Risk mitigation and exit strategy is also key. We go into more detail on this significantly in our 2019 nuke report. However, how you get in, when you get in, is really important. And then also how you get out is also a key piece. And so we suggest, these list of items need to be considered, and they all come into your risk mitigation and your exit strategy. That's one of the things that we talk about in our report heavily that not so many people have talked about is the exit strategy. How do you get out? Because this story will not last forever. And you cannot fall in love with this sector because it never falls in love with you. And so essentially, we need to highlight a few things here. The calculated selection versus a buy a basket and hope really is important because we believe in a concentrated portfolio, a highly concentrated selection of companies that we've identified with conviction. We've done our heavy due diligence on these companies to identify what we've set up. We've also integrated potentially speculations in that selection versus the other strategy, which people come along and they really haven't done any work on the sector and they don't really understand it, but what they've done is they've bought a basket of companies and they're going to hope, and that basket of companies may be more expansive to where really they have 25 or 30 equities and they're nothing more than an index fund. So we prefer the calculated selection method. Another key part of this sector is you must always maintain cash, always have a growing cash balance if you can, deploy capital properly, but always have cash. That is a key position in our portfolio and part of our strategy. It has to do with risk. It has to do with opportunity. Cash is key and you must have it. And in addition to that, you need to have access to it and, like we like to suggest, have the potential to access capital that has a low cost of capital, and always have those vehicles set up and prepared for opportunistic opportunities. Quality over quantity, we discussed that. I think that this is a key point, that less is more. And then of course have a measured plan of exit, which again, we describe in some detail in our 2019 nuke report. So when you consider all of this, you have the ideal portfolio strategy in our view. These things are the key parts. And I think that people need to take a look at these and consider them as part of their portfolio so they can build the proper setup. We have enough time yet to still refine and prepare our portfolios to have really an optimized strategy. And so I really suggest that people take a look at these different key parts and include those. When you do that, I think that you should, at the end of the day, come up with really a set of companies, potentially 12 based off what we've outlined here, if you were to filter and narrow down per our discussion points. And you'll have a varied allocation depending on the stage of the company, some of the timing considerations, the risk considerations, the speculation considerations as well. So you'll have a blend, and of course you'll also make sure that you have a cash position at the end of the day. So that is the end goal, and you should be off and running and prepared. Now, once again, I want to stress this is a high-level overview of how we see portfolio strategy here. Of course, more details can be found in our nuke report, which outline all, and I mean all, of the considerations. Thank you for your time and attention, and good luck with your allocations.